Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. In this video, we will be analyzing two articles, to where the first article is very positive and bullish, and then the next article is more bearish and negative, and in this video, we are going to be weighing the pros and cons of this company against one another to determine the future prospects of this overall company. If you're not already familiar with this company, Palantir Technologies is a big data and analytics company which serves both commercial enterprises as well as government agencies. And if you want more videos on Palantir Technologies, don't forget to go and obliterate that like button right now. Comment your thoughts down below about where you think it's headed in the future. Subscribe if you are new, and if you want to support me personally, press that join button and become a member of this channel to sponsor me for as little as 99 cents per month, because that's what keeps me here on YouTube. But with that out of the way, I say let's dive right into today's stories. So the first article we're going to be analyzing is titled Palantir's Upside: Should PLTR Stock Investors Double Down Now? So essentially, we're going to be discussing whether or not investors should buy at the current price point, which is around $15 to $16, to where the share price is closer to 16 rather than 15. So it seems that financial traders seem to be punishing Palantir Technologies after their recent earnings report because the company's revenue growth, by their estimate, wasn't good enough. This actually helps explain why Palantir stock tanked after their earnings, because even though they beat on their overall financial projections and they gave very good positive guidance for what they're going to bring in future quarters, the fundamental problem wasn't that Palantir failed in this regard, but rather Palantir did not beat expectations in the way investors and traders wanted them to. Due to the hype around artificial intelligence and Palantir being sky high, they thought Palantir was going to obliterate revenue results and earnings per share estimates, but either meeting or barely beating these estimates just didn't do it for investors, and that's why the stock sold off. However, I always try to bring investors back to reality. Stocks do not go up forever. Literally, after a stock surges, especially as much as Palantir has over the last few months, clearly a pullback was necessary and imminent. Stocks don't just go up forever. That's why we saw Palantir's PLTR stock drop quickly from around $20 down to around $15 to $16, which is what it's trading at right now. But even with that being said, Palantir Technologies shares are still up substantially on a year-to-date basis, and I think there is further upside potential in the future, but in the short term, the company's share price is going to be extremely volatile. Now, we have positive analysts like Daniel Ives of Wedbush, and then we have negative analysts over at Citigroup who believe Palantir could go even lower in their share price because they are, quote, just not impressed, end quote. So essentially, Citigroup and their analysts are not impressed with Palantir Technologies' future growth projections and their overall bottom and top of the line forecasts. And they cited how Palantir's, quote, low-teen revenue growth rates are not enough to keep up with artificial intelligence peers in the same group. And clearly, Palantir Technologies will have to deal with developing competition in their peer group within the artificial intelligence space, but as of right now, Palantir has no real direct competitors in my opinion. They do have other organizations and companies that are very close to them, but as of right now, I think Palantir is such a market leader in big data and analytics as well as artificial intelligence in their own regard and in their own respect that they are just dominating that overall segment right now. What's also interesting is that the author of this article is actually a bear and he's a critic, but at the end he says that Palantir's PLTR stock earns a solid B grade, and he invites investors to decide for themselves whether or not Palantir is a good company. However, it is interesting how he did change his overall prospects for this company, because I've addressed articles by the same individual previously, and he was extremely bearish and negative. Some people even think I'm a Palantir bear, which is absolutely hilarious considering that I've been reporting on the company for over 2 years and I personally own it in my portfolio. People think I'm bearish because I advocate for proper risk management and diversification, to where I don't allocate more than 5% initial portfolio allocation to any singular risky growth company, which includes Palantir. I like to be safe in my investments, and I like to hold companies for the long term. I also like taking profits at the top and reinvesting into the company back at their bottoms. So that way, not only do I get profits in the meantime, but I also get more of this company over the long term using the same amount of money that I use for my initial 5% allocation, either by a lump sum or dollar cost averaging. And if you know me, you know I like dollar cost averaging better than lump summing depending on the price of the overall investment. But overall, I like to see how there are some bears changing their minds about Palantir Technologies stock, and he's advocating that investors should take a look at their portfolio, do their own research, and see if Palantir Technologies is right for them. However, now we're going to switch gears and talk about a more bearish negative article to where it's titled, Palantir's valuation is unrealistic and unsustainable. Here is why you should consider selling. So clearly this is going to be more of a bearish article, and honestly, he is correct in the sense of Palantir's PLTR stock is trading at a premium right now compared to their current growth rate, and I do agree that this growth is not going to be sustainable over the long term due to the law of large numbers, but I think he is wrong to say because of that, therefore you should sell the stock, because clearly as companies become bigger and they start to scale more, their overall growth rates are going to decrease on a quarter over quarter or year over year basis. That's just how growth companies work. So you would want to identify a company early on right now and pay a premium for it, at least a slight premium, or preferably get a good deal on it, to where even if it's overpriced now, in the future, it's going to well exceed the price that you paid for it due to its rapid growth rate. And that's kind of the fundamental bullish thesis behind Palantir Technologies. Palantir's PLTR stock has been on an absolute tear ever since the beginning of 2023, especially since they are forecasting profitability for the entire year of 2023, which can get them into the S&P 500 eventually, so that's going to be a phenomenal catalyst to keep your eye on as well. Another catalyst that was very good for the company is that ARK Invest's own CEO, who is Cathie Wood, has been a very vocal supporter of Palantir Technologies as of late, adding shares of Palantir's PLTR stock to her ARK Innovation ETF as well as her ARK Next Generation Internet investment funds. So these are very positive developments. If you've been following this channel, you know that I advocated to add Palantir shares below a 10 PS ratio. And we also saw their PS ratio drop to as low as 6.9, and honestly, the lower the better for this rapidly growing company, because the lower the PS ratio is, the better deal and the farther your money goes per dollar compared to their overall revenue and valuation. However, since the company has surged, their PS ratio was around 21, which recently dropped back down to around 16 to 18 as of right now. However, if you paid attention to where I initially advocated to buy this company below a 10 PS ratio, you would be sitting really pretty right now with a very low average cost for this phenomenal company. But again, I give a warning to investors. This company is very volatile in their overall stock price, so there's no reason to invest at highs or premiums. This company clearly will come back down in price, and it will allow you to get a better buying opportunity. Some people believe that it won't even go below $15, and look what we're at right now. We're around $15.40. And in the short term, as of right now, I don't know how low it's going to go, and I also don't know how high it's going to go, but I'm betting on the long-term prospects of this company because I believe they're going to be worth more than $15.40 5 years from now, and that is the bet I'm willing to take. And here's where the article starts to get critical of Palantir Technologies, to where I'm going to add my own opinion on whether this reporter is correct or incorrect in my opinion. He starts off by saying that the positive hype for the company did not help it achieve the growth the market priced into the stock, and let me agree with him on that. Although investors were buying up the share price, that does not help the company's overall revenues, which is why we are seeing a very high PS ratio. And ideally, we would want a lower PS ratio because that makes our money go further in this investment. So let me agree with him on that point. However, he does go on to say this, and I quote, Palantir's unique sales model may be at fault here. It allows customers to test the platform for a trial period at no cost. This sales approach is meant to demonstrate the value of its products with the hope that customers will make an initial purchase and increase their use over time. End quote. Let me stop right here before I finish it and let me comment quickly. I like their business model. I have no problem with their business model, and I actually like how they're so confident that people are going to end up signing up to use their overall platforms, that they allow customers to test their platform for a free trial period at no cost. In my opinion, I like that. You just have to be patient to when this trial period runs out and whatever agency or organization was testing it now becomes reliant on their overall technology. It's almost like they are forced to buy Palantir Technologies, which gives them a customer essentially for life, because Palantir's technology is very sticky, it's very difficult to replace, it's very easy to get into, and Palantir is known for keeping customers for the long term. So if they can give an initial free trial and then keep that customer for 10 years after the free trial, that is more than worth it. So I just wanted to make that quick comment there, but let's move on. He goes on to say it requires significant investments of time and resources to acquire and maintain customers. End quote. And clearly that's just a no-brainer. Of course it takes significant investments of time and resources to acquire and maintain maintain customers. That's literally true for every single company I can think of. So to make a special pleading case that this somehow is negative for Palantir Technologies makes absolutely no sense in my opinion. Lastly, he says another headwind for Palantir Technologies is their acquisition strategy. And here he's alluding to the special purpose acquisition companies that Palantir Technologies invested into as a part of their Foundries for Builders program, to where he cites one analysis to where Palantir lost more than $300 million on those investments. And again, let me tell you why this is extremely misleading. Palantir is making money from these deals, especially because by Palantir making an investment in these companies signed a contractual agreement to use Palantir's software. So even though Palantir's investments are down, the revenue that they are achieving from these special purpose acquisition companies are still very real. And on top of that, as any good investor knows, you're only losing money on an investment when you sell. Anything else is just paper gains and losses. It only happens when you sell, whether or not you actualize those gains and losses. So technically, Palantir hasn't really lost anything. They've only decreased their value on paper in their investments, while their revenues are increasing due to these special purpose acquisition companies. So again, I think that this is misleading. These special purpose acquisition companies are not just random companies that Palantir decided to invest into. They believe these companies have the potential to become mega cap companies one day. And if that's true, Palantir's current investment in them will be worth hundreds of millions, if not billions of dollars. So honestly, this is just a waiting game to when these investments are going to pay off. And if you're a long-term investor like me, you are completely okay with making an investment, having paper losses for 5 years, and then after that, make phenomenal gains from that point onwards. It just depends on your overall time horizon. Lastly, he says investors do have some reasons to be bullish. There are still some reasons to like the company. For instance, Palantir has game-changing technology, and they have an advantage because they can deploy their software faster, cheaper, and more efficiently than many other data analytics softwares out there. Except honestly, I wouldn't say that Palantir is necessarily cheaper, but that would be a whole nother video. And then he concludes his article by saying that management has already reported seeing an overwhelming interest in its artificial intelligence technology from customers and expects demand for its services to multiply. Honestly, that's not bearish at all. That is extremely positive in my overall view. In conclusion, despite Palantir's second quarter 2023 post-earnings sell-off, he does say that the company is still quite expensive and trading at a premium. And for that comment, I do agree with him. Yes, they are trading at a premium even when we discount their current growth rate. But if they can get that growth rate above 19 to 20% over the next few years, honestly, it could justify their current PS ratios, especially if the stock continues to fall. That's why dollar cost averaging is going to be great, because you're going to be able to get an average for your cost basis for this company, which is going to benefit you, in my opinion, over the long term. So it does take brave long-term investors to keep this company over the long term, but remember to make wise investment decisions, stay diversified, don't over-allocate too much to a singular risky growth company, including Palantir Technologies. And with that being said, I would love to hear your thoughts down below. Don't forget to go and annihilate that like button if you made it all the way to the end of the video. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents by pressing that join button. And with all of that being said, I will see you in the next YT video.